Welcome back to the channel where we turn complex and confused financial accounting into clear strategy. I am Veena and today we will be looking into one of the most critical routines in the finance department of every company, month-end closing of books of accounts. Month-end isn't just about ticking boxes. It's about ensuring your numbers tell the truth so your decisions are grounded, your compliance is solid, and your strategy is sharp. Every month, organizations generate thousands of transactions. It can be revenue, expenses, accruals, adjustments, etc. Without a structured closing process, these numbers remain raw, unverified, and potentially misleading. Monthly closing transforms chaos into clarity. It ensures that financial statements reflect reality, errors are caught before they snowball, compliance obligations are met, and decision makers get timely, accurate insights. Here is a general timeline for monthly closing of books. Every activity is divided for 3 days. First 3 days, the data collection and pre-close checks are performed. The next 3 days, journal entries and reconciliations are done. From day 7 to day 9, review and compliance validations are performed. And finally, the last 3 days, which is day 10 to day 12, report is generated and signed off. Here is a checklist for every month-end closing. There are 8 major steps which has to be followed. First is to ensure that all the invoices, receipts and payments are entered, thereby ensuring that all the transactions are recorded. Second is to match the bank statements with the ledger balances, thereby reconciling your bank accounts. Third is to review your accounts receivables or accounts payables and flag all the overdue items and confirm the cutoff dates. Fourth step is to post the accruals and adjustments, whereby you are including all the expenses which are incurred but not yet paid or those where invoices are not yet received. Fifth is to pass the depreciation entries. Even if depreciation entries are automatically posted by your system, ensure that all the depreciation entries tally with your schedule maintained, and if there are any disposals for fixed assets, those are also reconciled. Sixth step is to verify the trial balances. Go through each and every account to ensure that there are no suspense accounts or imbalances open in the trial balance. Generate the financial reports, go through them and make it ready for review. Finally, back up all these documents and archive it. There are 3 common mistakes which has to be avoided in every monthly closing of reports. The first is ensure that cutoff is on a proper date and there are no cutoff transactions which are missed. Second one, if you have accruals posted in the previous month, ensure that you reverse them before posting the current month's accrual entries. Finally, do all your reconciliations proper. Petty cash reconciliations play a major role, so don't overlook them and ensure that it is reconciled. Whether you are managing public sector accounts or private companies, M&Es or any healthcare finance or corporate reporting, a disciplined close process empowers you to lead with precision and foresight. It is the foundation for every strategic decision that follows. If this video adds value to your journey, please like, share and subscribe, and feel free to drop your questions or insights in the comments. I would love to hear how you approach your month-end close. Thanks for tuning in.